The physician's home loan. What is it? Who is it for? What are some of the key benefits of it? And what might an example of using it look like? If you're new to the channel, my name's Tyler Roicki. I help people build income and wealth in real estate, and I run an international real estate team at eXp Realty. If you get any value whatsoever out of this video, all I'd ask is that you hit that subscribe button so that I can share more tips and resources with you in the time ahead. That being said, let's dive right into the video. So earlier this year, actually just about 3 months ago, my wife and I closed on this house that we're in right now. And she was able to make the purchase and fully fund it using the physician's home loan. I'm a licensed real estate agent and team leader, like I mentioned, and I learned a lot about the loan and the process. Up to this point, despite having helped a ton of clients buy a lot of homes, sell a lot of homes as well, this was the first time I actually dove into a situation that involved the physician's home loan, commonly also referred to as a doctor's loan. And there's a lot of unique benefits to it. But first, I'm going to pinpoint, who might this be for? This is going to be for doctors, dentists, medical residents, veterinarians, and other medical degrees, especially for those coming out of medical school who might be interested in buying their own home if there was an avenue to do so. More on that in a moment. But one of the key things is you've got to be scheduled. If you're coming out of school, you've got to be scheduled to begin work or residency within 90 days of closing on the home. And there's got to be documentation showing that that is the case. It can actually be used up to 10 years out of medical school. So it's not necessarily something that needs to be used right away. It can be used subsequently to finishing medical school. And it's designed to help medical professionals, doctors and the like, get into a position where they can actually get into a home sooner rather than not, knowing that there's a lot of work that goes into getting that degree and working in the field in order to build up that income, where in a lot of scenarios, if not for this, it might be challenging to actually get into a home sooner rather than not. And you're gonna need a degree or proof of education. That's something the lenders are gonna wanna see later on. You're also gonna need to have a signed employment contract indicating a future salary if that's the scenario. Like I said, residencies can also apply as well. But another key thing is good credit score. When I say good, 700 plus is going to be a good place to be. It's going to vary somewhat depending on lender, and they're also going to want to see certain debt to income. And I'm going to speak more on that in a moment, but that's who it's for in the gist of it. Bottom line is, if you're a medical professional coming out of school, this is something I would definitely look into if you got a home purchase on your horizon, or at least if you'd like to know what that could potentially look like for you. Now, benefits. Why might someone want to utilize a physician's home loan? Well, one of the really neat things is that they can use future income. They can actually lend on future income based on a signed employment contract. And that typically is not the case with home loans. Like conventional loans, they want to see 2 years of income at the very least, and consistent at that. So that's one of the key benefits of this, is they can actually use that future income that's going to come in based on that signed employment contract if it's within 90 days out of the closing date of the home. Also, another really big benefit is there is no PMI, no private mortgage insurance. In just about any other situation out there where you would be putting less than 20% down, there's going to be private mortgage insurance that kicks in. So for all these conventional home loans that are like 5%, 10%, there's an additional expense every single month in the private mortgage insurance. But in this case, you can actually get 0% down, and that's available up to a very high loan amount, even up to $1 million, depending on the lender. And there's plenty of lenders that will actually lend over $1 million, but if you want 0% down, that's what would be up to $1 million. And then if you wanted to go 1.5, even 2 million, there will be a down payment, even though it will be minimal, like 5%, 10%. It just depends on the lender. But bottom line is 0% down up to $1 million, provided the lender you're going with allows that, in which you're not having to pay any PMI. The only other scenario out there that you'll see that consistently is with VA loans. So unique thing for doctors here, something very special for medical degree holders and the like. And oftentimes there are relaxed debt to income restrictions because the lenders will look at and take into account medical school debt, because it's expected that you would have a lot of that would be a significant payment. And if you don't, if you're in a unique situation where you don't, all the better. But even if you did, that's not necessarily going to stop you or prevent you from being able to qualify. They will take that into consideration, and it's going to tend to be less of a restriction than it might otherwise be if you weren't going through the process of getting a physician loan as a doctor, medical student, what have you. And for example, now, keep in mind, this is a example. It won't necessarily ring true because rates will vary from time to time, also terms, conditions, etc. So it's likely they will look completely different when you run this scenario, even if it's the same purchase price and whatnot, just because, like I said, rates change and stuff like that. But I'll just use a real example, which is this home I'm in right now, which, like I mentioned, was able to purchase with my wife, and she actually met the criteria to utilize this kind of loan. So that's how that happened. But it was a $420,000 purchase price, which, by the way, is a new construction home, brand new build, pretty nice home in my market area. I know some market areas out there, 420 might get a nicer home or not, but this, in my market, this is actually a premium home, almost a custom home. I'd say like it's not the highest end custom home, but it's not like a starter home either. So it's like a nice mid-level semi-custom home, higher quality build. But $420,000, 0% down. We were able to get financing at 5.5% over a 30-year term on a 7/6 ARM, adjustable rate mortgage. So the first adjustment period is in 7 years. I can speak more to that, what the strategy is behind that. If you're curious, I'm not sure if I'll cover it in this video, but it's important to understand what that means and what happens after that 7-year mark and what can potentially happen to the payment, because it can actually go up significantly at that point. Now, that being said, the trade-off is the benefits on the front end you get to be able to secure a property, minimal down payment, and all the other benefits I covered. And these, at this point in time, at least, you're gonna find that they typically are adjustable rate mortgages for your physician loans. That being said, back to this example. So deposits, total cash out of pocket to get the home under contracts came into $4,650. That was between a earnest money deposit of 1% as well as an option fee for an option to terminate. But total lender fees came out to just under $5,000 between the origination fee, doc prep, and the standard lender fee. And total closing costs all in came into about $16,000. All said and done. That being said, with how everything balanced out at the closing table, total cash out of pocket to buy this home came out to about $11,000, and that's when you include both the appraisal fee as well as the home inspection. So about $11,000 cash out of pocket for a $420,000 home. But what's the monthly payment look like on something like that? Keep in mind, we're financing the entire purchase amount. And when you do that, when you don't put a down payment, there's going to be a tendency that the payment will be higher because you're funding the entire purchase with the lender's money. That being said, $420,000 at a 5.5% rate, at least over the initial 7-year term, is going to be at $2,385 in principal and interest payment. In addition to that, taxes and insurance. This is in Texas where this is at. You have property taxes here, and of course you have home insurance. And at this point in time, it's $544 going towards an escrow deposit that will help to cover that. Hopefully cover all of it, and that could go up in the years ahead depending on what happens with the property tax assessment any given year and also where home insurance comes in. But that brings the total principal, interest, taxes, insurance to $2,929 per month. To give you an idea, on a $420,000 purchase, 0% down, like I said, about $11,000 total cash out of pocket to do that. Now, keep in mind, as I mentioned, this is one example. Depending on where rates are at the time of this recording, lender fees might vary, closing costs very much can vary, so don't necessarily expect that you'll have the same exact numbers even if it's a similar purchase price, but this will give you an idea of what one scenario looked like utilizing this kind of loan. And that leads me to kind of final points, like what would be the next step to explore? Well, here's the bottom line. If you wanted to use this kind of loan, there's not a whole lot of lenders that specialize in it. Most home lenders don't really deal with physician home loans. So you'll want to know who to connect with who is experienced and knowledgeable with this particular loan type. In the process of exploring about going about this process for my wife, I was able to do a lot of research and make some connections, and I ultimately got connected with a lender who came highly recommended by one of my team members who had actually successfully closed a deal with him using one of these kind of loans, and ultimately ended up utilizing him in the process. But super knowledgeable, super helpful, great team behind him as well. But here's the thing, if you wanted to kind of shorten the learning curve and research process, I'm more than happy to help and be a resource however I best can. So if you're someone who might be eligible for one of these kind of loans, if you're doing your research now, it doesn't matter where in the United States you are, I'm happy to connect and see how I can help point you in the right direction as far as where to go to seek more information on the lending process, and potentially get you connected with someone on the ground in your local market who can help you navigating the next steps towards a purchase and really getting the correct information on your local market area. So do this, reach out, send me an email. You'll find that in the description below. And let me know specifically, you saw the video about Physicians Home Loans, so let me know where you're at in the process, timeline you potentially might be interested in exploring a purchase, and I will get those next steps in motion to help you navigate the road ahead with it. But I hope you found this video helpful and insightful. If you did, of course, like the video, but make sure you hit subscribe, and that way I can share more information, resources with you in the time ahead. That being said, thank you for watching the video. Until next time, I'll look forward to seeing you on the next video.